Thursday, October 27th, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at the shift from paper assets like stocks, bonds, and maybe even real estate, of course, into hard assets like commodities, precious metals, base metals, energy. I've been speaking about this since around late 2019, so we're going to look into that today. We're also going to look at the situation in silver, the tightness of the physical silver market. It looks like it's getting noticed, so we'll look at that, and then we'll look at the markets, of course. Before I start, though, I like to thank all of you who've been with the channel for years or days or months or weeks, and also for your participation. And what do I mean by that? Well, commenting below in the comment section, sending me messages, it helps. Without you, we wouldn't have a community. And the reason why I'm saying this today is because yesterday we went over 20 million views, which is, I think, significant, even though a lot of you know that I don't focus that much on the number of subscribers or views. What I try to do is provide you with value, hopefully. And again, thank you very much. Without you, we, the community, wouldn't be here. And just another thing, I'm seeing a lot of these bots again coming up on the comment section, and I'd just like to reiterate that I never give out WhatsApp numbers or Telegram. I don't have a Telegram channel or anything like that, so ignore them, report them if you want. I try to delete them as much as possible. So before we go into the shift here from paper to hard assets, just wanted to point out that this video is being sponsored by my affiliates, and I think they're important, more important than ever. The reason I have them is because people have asked me in the past, where can I buy gold and silver? In North America, we are affiliated with Miles Franklin. Miles Franklin is one of the few registered dealers with the U.S. Mint. They've been around for over 30 years. And recently, we also became affiliated with Lynette Zhang and ITM Trading. And in the UK, of course, we work with Gold Investments, Oliver Tempo and his brother Simon. And all the details, if you're interested in precious metals, if you've never bought precious metals, or you you want to try them out, the details are below in the description of every video. So back to the subject, the main subject today. Yeah, the shift from paper assets to hard assets. And one of the reasons I have believed in that for the last 3 years plus is that we had a bull market in the bond market from around 1981 to 2020, and even in 2019, I thought that bond bull market was long in the tooth, and that rates would eventually start picking up, and that instead of having lower highs and lower lows in interest rates like we did from 1981 to around 2020, we were going to start seeing higher highs and higher lows for the next, 40 years. And I've spoken about this before as well. There seems to be a bond or interest rate cycle, a long-term one of 40 years, because yields bottomed in 1941-42, around the time that the U.S. entered World War II. I think the 10-year was just below 2%, and it went up for 40 years. Of course, not in a straight line, up until it topped at 15.6% or so, the 10-year in 1981. And so since 1981, credit has become cheaper and cheaper. Central banks have taken advantage of this. Governments have taken advantage of this. We as consumers have taken advantage of this. And we borrowed and borrowed and borrowed. And that's pushed paper assets into the stratosphere. And why? Well, because stocks and bonds are discounted off these rates, and the lower the rates go, the higher the rate of return becomes for financial assets. And that's why we've had the everything bubble. And yes, commodities have seen bull and bear markets since the 80s, but the paper market has been dominant. I mean, just to give you an example, I think it's Andy Schectman said this the other day, that of all investable assets in the US, only half of 1%, I think, is invested in silver. So people have neglected not just silver, but hard assets in general. And we've seen that in 2022, we've had the worst performance in 100 years of the 60-40 portfolio, which is, I would say, a vestige of this period of easy credit since 1981. The fact that financial advisors tell you to put 60% of your portfolio in stocks and 40% in bonds, because yes, we've had the worst performance in 100 years of that kind of thing, and I think that's a huge signal. It doesn't mean it's going to continue the horrible performances for stocks and bonds, but what I think it means, it gives us a signal that in relative terms, commodities and hard assets are going to become much more important. And just have a look at this 2022 year-to-date returns. Commodities have performed relatively well compared to all paper assets, and I've taken this from Bridgewater Associates, their latest newsletter. Yeah, and I know gold and silver haven't done very well, but yeah, gold I think is much nearer to the commodities than, let's say, bubble stocks, U.S. bonds, and U.S. stocks. Yeah, silver, the spot price hasn't done well, but we're going to look at silver in a minute. So what about Metaverse and the FANG stocks? Well, I think that is also a signal that people are realizing that yes, social media technology is good, but we can't live in a world that's not real. We can't be always like on social media or live in the metaverse, right? And I think what's happened to Facebook, which is now called Metaverse, is a big signal of that. Meta just had its worst revenue decline in its history. Get out of the metaverse and get back to the real world. Meta revenue growth. There you go. And Tavi Costa, I've had him on the channel a few times, and he, like me, believes that hard assets, commodities, energy, base metals, precious metals will outperform paper assets for at least another decade, and I believe in that too. So now to physical silver. Yes, you probably have seen many in the alternative talking about this, the premiums and everything. And it's mainly like channels like mine and others like Arcadia Economics or Liberty and Finance, all in the alternative, Rafi Farber. And I probably have missed a few, or Silver Slayer. But we even have something on zero hedge. And you might say, well, zero hedge is alternative. Yes, but I think zero hedge has been around for a very long time, and they're becoming a little more mainstream, I would say. So they talk about here, this article came out this morning, London time, as physical silver demand soars. Bullion dealers offer huge buyback premiums. So let's just quickly go through this. For those who have been keeping an eye on silver, things are getting a little tight. Early Wednesday, we noted a report from Ronan Manley of Bullion Star, who revealed that more than 50% of deliverable silver on COMEX is suddenly not available. I read that article. I got in touch with Ronan Manley through email. He hasn't come back. I'd like to have him on the channel. He basically explained how COMEX itself is saying that a lot of the eligible silver stock, and by eligible is all the silver in warehouses that are like COMEX warehouses, but they're owned by long-term investors, and COMEX used to count all of it as eligible, but even COMEX says we don't really know whether these long-term investors would want to deliver their silver to COMEX. So it could be even less than 50%. The stock of silver we need to really look at for COMEX is the registered, which is eligible, and it has a warrant on it that you could deliver the silver, and that's dropped I think below 36 million ounces, which is the lowest in a few years, I would say, or two years or more. But anyway, it says here, Manley brought up this October 19th tweet from metals expert Nikki Shields, who said of delegates in attendance at the annual LBMA Gold Conference in Lisbon. And this is what she said: they're mildly bearish gold for the year ahead. They see 1830 by 2023, but super bullish silver $28.30 as the focus was on physical tightness driven by unprecedented demand. So who are these people in the LBMA? Well, they're the people who manipulate, who try to keep precious metals prices under wraps. The bullion banks. I've known about the LBMA and their forecast for gold and silver. They're always very bearish because they're trying to control the price for the central banks. LBMA, the directors of the LBMA, they're all, a lot of them are ex-Bank of England people, ex-Bullion Bank. So, but they're bullish silver. But I think 28.30 is conservative. But anyway, and this is what it says here too. Second, the spot market for silver remains in backwardation, meaning that the spot price of silver is above the futures price, which indicates an extremely strong demand for physical metal. And as the chart below shows, while silver futures have gone nowhere in the last 4 months, the price of physical coins has been soaring. Demand has become so strong that, as the chart below shows, the extent of the physical silver percentage premium over spot is almost unprecedented. So this is for Silver Eagles. The result: bullion dealers are offering giant premiums over spot to buy silver. AppMax, for example, is offering $10 over spot per coin right now. So there you go. SD Bullion is offering 10.5 to 11 over bids. Update: CEO Dr. Tyler Wall says that the physical silver market is as tight as I've ever seen, and that this company has been offering 11 over spot for US Mint Silver Eagles for over a week. And you heard as well from Andy Sheckman, who I had on last week, the same thing. And just before we go into the markets, I think I've told you about Atkinson's Bullion, one of the biggest precious metals dealer in the UK. They've been sending me emails because I've dealt with them. A few weeks ago, I got one saying, we'll buy your gold for 1% over. Last week, I got one saying, we'll buy your gold for 2% over. And now they want my silver bullion, which I'm not going to let go of, and they're paying 10% over. I would say Atkinson's, try more like 50 or 100% over. I'd think about selling my silver to you. 10% is not enough. And I think Atkinson's is going to be on next week offering 20% for silver. That's my opinion. So, with that, let's look at where the markets are this morning. It's around 8:30 a.m. London time. We've got spot gold trading at 1660, is down about $5. High's been 71. Low is just around here at 1659. I think the LBMA, the Bank of England, they're now in there very actively trying to control the price of gold and silver especially. Silver is very important in my opinion. So this is why we're getting this constant selling this week during London, in the mornings in London. And but it's not helping. People are still want the real thing. And yeah, as I've said for many, many years, even before I started this channel, I told friends, family, colleagues, you need to buy the real thing. That's how you defeat the banksters, because they're criminal. Because when you manipulate a market like this with paper, which is basically nothing, if we tried to do that, we'd be arrested for that. That's why I say the LBMA, Bank of England, they're criminal institutions. That's all there is to it. So spot silver is down just over 1% at 1932. High's been 68 and the low is around here, 1930. To the stock market, the Dow future is up 83 points. NASDAQ is down 15, S&P up 5. The FTSE is up 7, and the Euro Stoxx 50 is down 18. To the currencies, sterling is down 0.25% at 115.88. Yes, the currencies rallied quite strongly yesterday against the dollar. They're coming off a bit here. The euro is down 0.2 at just above 1.006. The dollar is down 0.33% versus the yen at 145.88. And the dollar is up slightly versus the Swiss franc at 98.80. Dollar's up 0.75% versus the yuan at 724.30. The dollar is down 1.5% versus the ruble. It's trading around 61. So there you go. To the other currencies here, Aussie dollar down 0.25, 64.77. Canadian dollar, well, the dollar is up 0.25 versus the Canadian dollar at 135.88. And I saw that the Bank of Canada was supposed to raise rates yesterday by 0.75%. It raised only by 0.5%. Initially, the U.S. dollar rallied against the Canadian dollar, but then the dollar turned around and actually the Canadian dollar gained ground. So there is speculation out there that the Fed might do the same, that they might hike only by 50 on November 2nd. That's still up for speculation. The Kiwi dollar is unchanged at 58.35. To the general commodities, WTI crude is down 0.2% at 87.05. Brent is down 2/3 as well at 93.40. High-grade copper is down 1%, just below 350. So we have rallied in the last few days in high-grade copper. U.S. nat gas is up 0.2% at 615.30. check out the European nat gas futures, the TTF. Yeah, that's down 2%, trading at 102. Let's finish off with the bond market. Yeah, Treasury yields have been dropping since late last week. They got up to like 4.33 the 10-year yesterday, and overnight we got down to 4%. Right now it's up 5 basis points at 4.06. So it looks like that 4% level is going to be key level there in 10-year yield. The UK government bond market, the 10-year yield, gilt yield is up 7 basis points at 365. And the 30-year is up 8 at 376. And I've noticed a lot of publications like the Telegraph, FT, they seem to be celebrating, saying that everything's fine now in the UK. Public finances are going to come under control and interest rates are going to stay subdued. I think they're wrong, and I'll be talking to Paul from the Sirius Report about this later on today. I'll probably publish the interview later on today as well, so keep an eye out for that. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day. Take care. Bye.